Good evening, everyone. Thank you for joining us today on our webinar, Insurance, Your First Line of Defense. Today, we have with us Ms. Jayalakshmi Kannan, Financial Planner with thoughtplan, and Mr. Janaki Raman, also a Financial Planner with thoughtplan. I invite the team to take the presentation forward.
Thanks, Poonam. Hello all. A very good afternoon and a warm welcome to everyone who's present here. In this webinar, we look at what is insurance and how to look at insurance in a different way. There are some very common myths that have been surrounding insurance for a very long time. We'll help you to clear it and look at insurance with a different perspective and the ethos behind it. Let me start off with an example from my very own life. As a child, I used to visit the circus when I was a kid. When I went there, I used to see the stunt performers who were performing different stunts. But when I observed more carefully, I saw that there was always a level of safety net below them. That is exactly what insurance is, a level of safety net for your financial life so that in case of any health emergencies, you don't dip into your savings or go into debt. That is exactly the way to look at insurance. You can also think of insurance as a way to transfer risk from yourself to another third party, which is the insurance company. That is the third party. Insurance is like the soldiers who are fighting the defense at Kargil. They are your first line of defense who come to your protection in the case of any health emergencies or terminal illnesses. Now, let's look at what is on the agenda today. Now, in this webinar, we will look at to clear some of the basic myths about insurance. We have this as a topic because once these myths are cleared, you will have a clear idea of what is insurance and how each and every person can proceed about insurance. Secondly, we will look at, as I was saying, what is insurance? The idea behind insurance, the idea behind tying insurance with risk. Thirdly, we will look at why does each and every person need insurance and how does that will differ from each and every person. Fourthly, we will look at the different types of insurance policies. A lot of people are confused between these type of insurance policies. We aim to provide more clarity on each of them. And lastly, a checklist before you buy an insurance plan. That is, what are the things that you should look for before you buy a health insurance or a term insurance plan. Now, coming to the myths about insurance. These are some of the myths that we aim to clear so that you have a different perspective about insurance. The first myth being young and healthy people don't need insurance. Quite opposite, young and healthy people do need insurance. When you start off early in your career, you have very little savings or very little emergency funds to protect you in case of any health emergencies. Let's say you get into an accident and the accident bill runs up to 2.5 lakhs. Without a proper health insurance plan, this will lead to you dip into your savings. That is why always a health insurance plan as well as a proper term insurance plan is recommended when you are young. Now, coming to the second myth, life and health insurance through my employer is sufficient. Now, there is a growing trend in India with people thinking that when my employer provides me with sufficient life and health insurance, that is enough. But this is not the case. Let's say there is a scenario, a recession, where you are facing with a job loss, or a period of transition where you are transitioning from one employer to another. In this period, the existing health insurance from your employer will not cover you. If you are faced with any health emergencies during this period, you are left to fend off on your own. Myth number 3 being insurance is for investment purpose. This is quite the opposite. Insurance is never for investment purpose. For example, a proper term insurance plan can provide you 10 or 20 times the cover, and ULIP plan can provide you at the fraction of the cost. Let me take an example of ULIP. ULIPs often combine insurance plus investment. They are very costly and they don't provide good returns as compared to traditional mutual fund policies. Adding to this, ULIPs also offer insufficient cover to you. So never mix insurance and investment. Always have separate insurance and separate investments. Myth number 4, life insurance is for saving taxes. Let me be very clear. The primary objective of life insurance is that an earning person, in case of any unforeseen circumstances, his dependent should not be left in financial ruin. That is, at least they should have some financial stability in their life after the person passes away. That is the primary reason why people take term insurance policies. An added benefit to this is that there is also help you to save taxes. Now, coming to the next myth. I would rather choose a whole insurance policy over a term life policy. Now, let's be very clear. These two policies are very different. Term life policy can provide you with a larger amount of cover at a fraction of the cost than a whole life policy. Whole life policies, on the other hand, continue till the age of 99 and are preferred, by people who have commitments after the age of, let's say, 65 or 70, or have special children or special kids who will need that extra cover after they pass away. Coming to our next myth. I have a comfortable amount of saving, so I don't need insurance. Actually, this is the exact reason why you need insurance. So let's say I have 1 lakh of emergency savings in my bank account, and I'm faced with an emergency of 2 lakhs. I don't want to go and dip into this 1 lakh of savings. If I have a health insurance policy of, say, 5 lakh sum assured, this health insurance policy will be more than sufficient to meet that emergency, and my savings will be very safe with me. Now, coming to the next slide, what is insurance? Now, this is where insurance can be seen as a risk management tool. When I say insurance, the thing that comes to most people's mind is that I want to get my premiums back. I want to get the amount that I paid for my premiums at the end of the term so that I'm not in any loss. But that is not the case of insurance. Insurance is meant as a risk management tool, both in case of a health and a term. In case of a health, you are covering yourself for any emergency medical expenses or for any expensive procedures. In case of term, any other unforeseen circumstances and you end up passing away, a term insurance can help provide that financial stability and financial peace to your family even in your demise. Now, to look at some of the common things before you buy insurance. Firstly, the policy number, which is very common to be looked at. Secondly, what is covered. So, for example, if you take a health insurance policy, they might have some conditions such as copay, whereas only a portion of the expenses are being paid by the health insurance company and the rest have to be borne by you. Don't worry, we look at all this in a lot more detail in the coming slides. The tenure of the cover. If you buy a health insurance policy, they usually come with a 1 year or a maximum 2 or 3 year cover, and they'll have to be renewed year on year. Whereas for a term insurance policy, they usually cover you until the age of 65 or 70. Now, coming to the premium amount. The premium amount is the amount that you will pay so that the health insurance company can provide you the adequate cover. Lastly, but very importantly, terms and conditions. The terms and conditions of an insurance policy are the small print that you should be very careful about. Insurance policies often have a lot of pre-existing conditions and waiting periods before you can even register a legitimate claim. So always look online or read the policy booklet before you choose a term insurance or a health insurance policy. Now, coming to the next slide, I will pass on to my colleague, Jayalakshmi, who will explain it better.
Yeah, thank you, Jankiram. So now let's try to understand why you need insurance with an example. So on the screen, you're looking at Mr. Ram, who is 40 and he works for a tech company. And his dependents are his wife, a kid, and his aged parents. Ram is someone who thinks insurance is a great expense and he doesn't get anything out of it. So he never took any insurance at all. One sudden day, he passes away in an accident, putting the whole family in a very difficult situation. So this whole scenario gives us a key takeaway on why someone should not feel that they don't need insurance because of various reasons, because uncertain events like this happens to anybody at any point in time. So now let's look at how this whole scenario would have been better if Ram had a proper insurance cover. So as a basic requirement, if Ram had a term insurance cover, then they would have gotten the proceeds from the term insurance once the accident had happened. And it is important that they also had a health insurance covering the wife and the kid and also the aged parents, so that in case of any medical emergency, they will be confident enough to face the same thing without having any worry. So more than the emotional loss, the financial loss will be a burden in case of such situations, right? So this links us to the next slide, where we try to understand what insurance provides versus what we seek from insurance. The first and foremost thing is that it gives us the independence and confidence to face any challenges when there is a insurance in place, right? And the second one is that it lessens the financial worries that happens due to any uncertain events. And the third one is, like he mentioned, it acts as a safety net to support your family. And the last one, it helps to focus on your financial goals without having to worry about anything else. For example, tying back to the example that we just saw, if they have to meet the goals of the child, like the education goal or the wedding goal or any future goal, it'll be better for them to plan for the goals with an insurance in place, so that they don't have to worry about anything else that needs to be taken care of here, right? So the main takeaway from here is that we need to understand that insurance is a pure risk management tool, and we're not supposed to expect anything else out of it. So insurance mainly provides us with a lot of security and a peace of mind. Moving on, let's look at the two major types of insurance. The first one being life insurance, which we just saw. To give a brief on it, this is majorly to protect the financial dependence that the breadwinner has during the income phase, in case anything were to happen to the breadwinner of the family. And the next one is health and critical insurance. Health insurance, as all of us might know, is an insurance that helps to provide the best medical treatment without having to worry about the financial cost that is being involved in it, right? And critical illness insurance is an insurance that helps to cover any terminal illnesses like your cancer or Parkinson's, any major illnesses that are there. So critical illness insurance can be taken as a rider to your term insurance policy, or it can also be taken as a standalone policy. Now, let's look at the coverage that is required in each of these types of policies. So the first one is life insurance. There's something called a human life value, which helps you to arrive at the coverage that you will need for the life cover. So this takes into consideration a few factors like the income growth, and then the goals that a person might have, what are his liabilities in the future, and we arrive at the present value of those, which will give you the coverage that one must have. The thumb rule for life insurance is that one need to have at least 10 times of their annual earnings. For example, if your annual earnings is 5 lakh, then at least you must have a cover of 50 lakhs of your life cover, right? And while this is just the thumb rule, it is important that you analyze what is required in your particular case to arrive at the coverage that is required. For health insurance, there is no ideal sum assured, but the minimum required coverage for an individual can be between 5 lakh to 10 lakh. And with health insurance, there are few points that you need to consider before signing up for the policy. Like Janaki Raman mentioned, there are a few sublimits, there are a few waiting period. So sublimits generally are there for the room rent. If anything were to happen for anybody in our family, the first thing that will need for hospitalization is room rent expense, right? So there are a few who have capping on the room rent. For example, they'll bear say 1% of your sum assured or 2% of your sum assured on the room rent. So it's important that we understand and check for no capping and no sublimits on the room rent. And then there are pre-existing diseases. So pre-existing disease is something that you already have when you sign up for a policy. So generally, these kind of illnesses are covered only after a waiting period. So it's important you understand what is the minimum waiting period, which insurer provides the minimum waiting period for the particular illness that you currently have. And there is a co-payment, which means the cost of the expense need to be borne by the policy holder and the insured. So it will be on a sharing basis in a percentage. So nobody wants to pay the premium and also bear half of the cost, right? So it's important you go for no co-payment clause as well. So with health insurance, there are a few conditions that you need to understand before you sign up for the policy. And you need to understand what are the exclusions that are there in the policy so that you don't end up getting into surprise when you go for a claim and then they say it's not covered in your policy, right? And moving on to different types of insurance policies. Under life insurance, we have 4 subcategories, which we will see in detail in the following slide. And the general insurance has the below categories. So health insurance, which we just covered. Professional indemnity insurance is basically for professionals like doctors and lawyers, where the client sue them for any negligence or errors in the professional services, then that can be this insurance can be used as a protection against that. And vehicle or motor insurance, where the third party insurance is mandatory, as all of us may know. This helps us protect for any damage that happens to the vehicle. And travel insurance is protection against the risk that is involved during the travel. For example, any medical emergencies or the lost baggage or flight cancellations, anything can be covered during the travel. And that is under the travel insurance. And then home insurance is mainly for the home owners, where it provides protection for the property and its contents against any theft, fire, or natural calamity, etc. So these are the major types of insurance policies that one can look at and consider buying as they feel it suits to their case, where life and health insurance is one of the most important insurance policies that everyone must look at. Let's look at the different types of life insurance policies in detail. So the first one being whole life insurance policy, where the coverage is given throughout the period until the end of the life. And the next one is endowment policy, where it is a mix of investment and insurance, and there is a guaranteed payout for a particular period during the policy tenure. And then comes the ULIP policies, which is unit linked insurance policies. It is linked to the market, it is market linked product, where here also there is a mix of insurance and investment, where the premium is quite high. So these are the 3 different types of life insurance products apart from what we saw in the previous slide. The question is, when do you need to be insured? As we try to understand with the example, the crux of life insurance is that you need the coverage during the income phase of the breadwinner, right? So that is where the term policy comes into place, where it is a pure life cover, where the premium is much affordable for the sum assured that you get. So when compared with all the other policies, term insurance policies gives you the best coverage with the best premium that one could go. And as we saw, the traditional insurance policies and ULIP policies where are the bundled products, where there's a mix of investment and insurance, and obviously the premium is on the expensive side, and it does not give the required sum assured as well. So it is always better to go for a pure policy and never go for a bundled up product, because you end up losing either of it, right? And Janaki Raman, you can take it from this.
Okay. So now let's look at how do you make payments for these kinds of policies and what is the optimal way to go about this. Firstly, being limited pay. Limited pay is something like you pay for a tenure of 5 years, 10 years or 15 years and you stop paying, but the policy term and the period of cover lasts. For example, let's say I take a term insurance policy which lasts me until the age of 65 years, but I opt to pay the premium only for the first 5 years. This means that my policy still is in effect for the rest of the period, but my premium paying term stopped with the 5 years. Premium is on the expensive side, but this ensures that after a period of time, I stop paying my premiums. Now, coming to regular pay is not only the common thing that is seen by most people. You pay the premium month on month or a year on year, and the policy stays in effect. Now, coming to the most controversial thing, which is the return of premium. Now, most people opt for this thinking that at the end of the policy tenure, they get their money back. But wrong. When the thing with return of premium is the policies tend to be very expensive when compared to a normal term insurance policies. Since the insurer has to give you back the money at the end of the policy term, they make sure to charge you extra premium so that they are able to do this at the end of the term. Now, these kind of policies end up draining your investment income so that there is no extra cash flow left for you to do the investments. Always go for either limited pay or regular pay policies with return of premium never being opted into. Coming to the next slide. What do you look at before looking at an insurance provider? So let's say I want to go for a health or a term insurance policy. How do I select an insurance provider? Now, first one I look at is the credibility. How long has the company been in the market and what is its reputation? Now, we have some companies which have been in the market for a very long time and which also have a pretty good reputation of honoring their claims. Secondly, coming to on the topic of claims, obviously the claim settlement ratio. Most of you would know what the claim settlement ratio is. This is the percent of claims settled by the insurer against the total claims received in a year. So all things considered, a higher claim settlement ratio is always preferred because in the case of legitimate claim, a higher claim settlement ratio will ensure that your claim gets paid. Persistency ratio. So let me give you an example. If I take a health insurance policy and if I were to continue with that health insurance policy, since it is very good for the next year and the year after that, that health insurance provider will have a higher persistency ratio. This is simply the ratio of the policy holders that have renewed their policies with the same insurer year on year. Coming to something called as the solvency ratio. Now, this is a very important indicator of the financial health of the insurance company. IRDAI has mandated that at least 1.5 times or 150% to be maintained by the insurance companies. Now, coming to our next slide to look at what do you look at before you buy an insurance policy. Firstly being how much insurance do I need? Now, like previously said, when you buy a term insurance policy, you need at least 10 times the cover. So let's say I'm earning 10 lakhs per annum, I would need at least 1 crore cover. And then if I have any other additional aspirational goals or dependence needs to be met, that will get added on to this 1 crore. For a health insurance policy, a cover of 5 lakh per person is usually required. For example, with a family of 4, the cover that is usually needed is somewhere around 20 to 25 lakhs. Now, coming to the next, is your policy cost effective? Policies such as ULIPs and return of premium policies are often never cost effective, whereas in the case of a health insurance policies for older people are often on the expensive side, but are still preferred since it is better to go for them than having no cover for your older parents. Now, what does your policy not cover? Now, this is where the gray area comes in. Some policies have pre-existing condition waiting periods, whereas let's say I have diabetes and I go for a health insurance plan. This condition, though I have it, and even if I make a legitimate claim, the cost of the claim will not be covered under the policy since there will be a mandatory waiting period of 36 to 48 months. And there are also other limits such as copay, room rent restrictions, and disease-wise sublimits. So for some diseases, even though the cost of the treatment may run up to 10 or 12 lakhs, the insurer might only cover half of that or a pre-specified amount. Now, let's go further to answer your questions. But before that, I would like to end this session with a quote. I'm prepared for the worst, but hope for the best. Best summarizes what an insurance policy aims to achieve. Now, let's look at some of the frequently asked questions that have been asked by you before attending the seminar. I will pass on to my colleague Jayalakshmi, who will take the questions.
Yeah. So before we move on to the Q&A session, we'll just look at some of the FAQs here and we'll try to answer that. So the first one is, do I really need insurance? I think by end of the session, most of you must have gotten the answer for this. But with regard to life insurance, as I mentioned before, if there are financial dependents, it's important that you have your life insurance. And for health insurance cover, it is important that all of us have a basic cover in terms of health insurance to meet any medical emergencies that are there. What is the age limit for term and health insurance plan? So the entry age limit for term insurance plan is between 18 to 65 years, and with health insurance plan, it is not, there is no age specific restriction, and anybody can opt for a health insurance plan. Does someone need insurance at the age of 56? Again, like if someone were to work or have some sort of financial dependence and they are earning after 56, then it will make sense to hold a life insurance plan for them. And health insurance, of course, is necessary at any age. What are the features to consider in a health insurance plan? So as I had mentioned earlier, I'll just quickly try to summarize here. The first and few points that you need to check is about the pre-existing disease. If there are anything that you have before entering into the policy, look at what is the waiting period for covering any expenses with regard to pre-existing disease, and look out for no capping on the room rent expenses. And there are co-payments in few policies. That is something that we need to look at. We have to opt for no co-payment in any of the insurance policies. And also there's no claim bonus in that's given, where if you go without claiming for a particular year, then you get an additional bonus that is added to the sum assured in terms of your health insurance cover. And how to ensure the term insurance sum assured reaches the family. So the first thing is the family must be informed of what are the different insurance policies that you have, so that they know what currently goes in case of any uncertain event. The first step is reaching out to the insurance company in case of any event that happens. So the family should reach out to the company, and then they do their legal background check, and then the proceeds are processed in a term of 30 to 45 days generally. So the one thing that we need to do from our end is intimation to the insurance company. Can NRIs buy term and health insurance plan in India? Yes, NRIs can buy both the plans, provided they are present in India while doing the process, I mean, the taking up the policy. And more about insurance services in detail, terms and charges. So we are corporate agents registered with IRDA, and we provide insurance services such as reviewing your insurance policies, existing policies, and also providing new insurance policies with regard to life and general insurance. And we will put up the number at the end of the slide so that you can reach out, and we'll connect you to our insurance desk. There are no particular charges for insurance reviews that we do here. Yeah. So that's it, and we can open for the Q&A. If there are anything, please type it out in the chat box.
Okay, so I will take up the questions. My annual income is rupees 1,50,000. I am eligible for term insurance. So currently the limit set is rupees 3 lakh for a term insurance cover of 50 lakhs. Is there any insurance plan for 60 years aged without copay option? I have reviewed most of the policy, but all having clause of copay. Yes, sir. Once you cross the age of 55 to 60, most insurance plans comes with at least 10 to 20% copay. So the best thing that we suggest is you go for the plan with the copay, but always maintain a good portion of money in an emergency medical reserve, so that even with the copay, you will be able to tide it over. But yes, most plans do come with a copay when you cross 60 years or 65 years. Okay, do I require insurance? As me and my wife both are working, both have insurance in respective office. This is a very good question, sir. Though your office insurance will cover both you and your wife, it is always recommended that you take a separate health and life insurance policy outside your office. In the case of a job switch or a job loss, one of you might be left without insurance, and in case of any emergency, the health insurance plan will not be in effect. It is always good to have a separate health insurance policy, individual policy that is separate from your employer. Details about claim percentage. Yes, sir, we will connect you to our insurance desk and they will able to answer you about these questions. I have few questions. Can existing life insurance be brought under the MWP Act? Do you assist in indemnity insurance as well? So I will first answer your second questions. Yes, we do assist in taking up professional indemnity insurance as well. Can existing life insurance be brought up under the MWP Act? So I'm not quite sure on the question, but I will get back to you on this with an answer. How much I have to be insured in health insurance? So for example, if I'm earning somewhere around 10 to 15 lakhs, what is recommended is that each member of my family have insurance of at least 5 to 10 lakhs. So let's say it's a 4-member family, then the minimum insurance should be around 20 lakhs as a family floater. Can I include my mother also in my floating health insurance, which covers me and my spouse? Yes, sir, you can also include your mother. The term insurance premium will go, the health insurance premium will go up by a little bit.
So generally, the health insurance premium for a floater policy is the premium is calculated on the eldest member of the family. So it is advised that if the parent is a senior citizen, then we have a separate cover for them and do not include them in the floating insurance policy. Yes, sir, we provide vehicle insurance assistance as well. We can get in touch with you separately.
Will there be a difference in premiums if I take an insurance via Policy Bazaar and iThoughtPlan? How much iThoughtPlan charges? So we don't charge any charges for taking up insurance, but usually when you take up a policy online, they will offer a 5% discount. Could you please share this meeting? Sure, sir. We'll be able to share it. Key points to note before taking health insurance. Yes, sir, sure. So when I'm taking health insurance policy, the first thing I look at is that there should be no copay. Copay is something means that you will have to pay, if a copay of 20%, you'll have to pay 20% of the expense out of your pocket, and the health insurance will pay the rest 80%. Another thing to keep in mind is that there should be a very low waiting period. Normally a waiting period of 2 years to 3 years is the norm. If you can go for something with lower, that is preferred. The policy should not have any room rent regulations. So let's say if I go to a hospital and there is only a private suite room, some policies will not cover it, while other policies don't have any room rent regulations and I can pick any room I want. There should be also a very low specified illness waiting period. Some illnesses will have even if you get it after taking the policy, they will have a waiting period for which you'll have to wait some. These are some of the points you'll have to look at. Let me answer this.
So,
yeah.
Go ahead.
Sorry. I need to advise to select health insurance, term insurance. Can you help? Yes, sir. We can connect you with your. Please contact our insurance desk. They'll be better able to assist you with it.
The maternity covered health insurance, like generally, health insurance will have a waiting period for maternity expenses. So we'll have to check for which particular health insurance that you need, and we will probably connect you offline and help you with that. But generally, most of the insurance plans will come with a waiting period for maternity coverage.
Can you guide me on how can I claim the amount? Yes, sir. In case of a claim, our health insurance desk can also help you with the claim process. I have already company health insurance, and parents have separate health insurance. It is necessary to take one more health insurance. So your parents' health insurance is there to protect them. In case of any job loss or job switch, even a basic health insurance policy of 5 to 10 lakh can help you cover any emergencies, since you can't use it from your parents' health insurance policy. So what is beneficial to pay premium one time or regular payments? So when you pay premium and a limited pay, let's say 5 or 10 years, or as a single payment, you get a discount. Let's say 5 to 7% is the nominal discount that is given. When you pay it over a period of regular payments, there is no discount. You will keep on paying the regular payments, but you don't have to pay money as a bulk. It will depend on person to person, but normally regular payments or limited pay for 5 or 10 years is preferred over a regular payment. I have term insurance for 50 lakhs, want to go for 1 crore. Is that good idea to amend with existing insurance, or I can go with any other insurance for additional 50 lakhs? So it is good that you want to take additional term insurance cover. You'll even if you go with another provider, you will have to disclose with them that you already have 50 lakhs. You can contact our insurance desk. They can help you with taking with your existing provider or with a new provider. Actually, I'm working in tech organization. CTC is 10 lakh. I have health insurance for myself and spouse only. I am planning to add my parents to age group is 55 to 60. Please suggest me to take policy or need to add existing policy. So if you're working in a company, kindly do add them to the company sponsored plan, but also look at taking a separate policy plan for them, so that in case of any job loss or job switch, they are still covered under it. When the age goes above 60 or 65, normally people face a lot of health uncertainties. In that age, having a health insurance, even though it is a bit expensive, is pivotal. Is it good to have two insurance policy from different provider for same person? Yes, sir, you can, as long as the policies are beneficial, it is okay to have it from different providers. But please do read the policy terms, because when you're taking policy for senior citizens, there are a lot of restrictions and co-pay limits which come under, even if you take it from different insurance providers. If I go through thoughtplan, will I get support during claims process? Yes, sir, our team can help you with the claims process as well. In health insurance, unlike life insurance, the premium is increasing as we age, correct? While we could select cheaper and best suited insurance, if the premium is low when I start but increases by a large amount in future, I end up paying more. Is there a way to have control on it, or iThought team can help in assisting by selecting cost-effective plan through iThought? Okay, sir. As like a term insurance, health insurance will have increasing premiums once the age band is crossed. The age band is usually 5 years, let's say 25-30, 30-35, 35-40. Health insurance costs do keep going up, but it is worth to pay the extra premium, as when faced with a medical emergency, this plan will come into effect. Currently, health insurance premiums do go up with age, and there are no ways to combat against it. How to deal with two different health insurance provider for base plus super top-up during claim settlement? Yes, sir. So this is possible. I will put you in touch with my insurance team, or please do contact them. They'll be help you to answer this question regarding the claims process more effectively. Whether we have to take individual policy for family members or a family floater. Family floater is often a good way to go about it, but please make sure that when you take the family floater, the person with the highest age or the oldest for whom the premium is calculated. Top-up insurance over basic plan is fine. Okay, sir, going for a super top-up over a basic plan is a good thing to have. Top-up insurance usually have a lot of sub-limits. A super top-up is preferred. So yeah, super top-up over a basic plan is a good thing to have. I already have a floater plan ported from my previous employer covering my parents as well. Is it possible to split it into two floaters or go for better insurance provider? So it is not possible to split it into two floaters, sir, but we can help you with choosing going for another insurance with a different provider. Best insurance provided for health insurance in the market. So kindly get in touch with my health insurance desk. They'll be able to better answer your questions, since they will have the comparison of the all the health insurance policies. If I take health cover for 20 lakhs, I may need 50 lakhs cover in the next 15 to 20 years due to inflation. Can we increase the cover limit when required? Yes, sir. So this is where something like a super top-up comes into effect. You can increase the cover up to like 90 lakhs or 1 crore with the help of a super top-up health insurance plan. There is a myth of continuing with same health insurance provider for continuous 8 years to get some additional benefits. What is your view on portability of parents ages more than 55 years? Okay, so there is a benefit with continuing with the same insurance provider. You get something known as a no claim bonus. So let's say I have a health insurance policy of 10 lakhs, but with the help of a no claim bonus, the policy's sum assured can go to 20 lakhs. But as far as the claim process comes, if there is a legitimate claim, most health insurance companies will try to honor that claim. There is no loyalty benefit kind of thing here. What is your view on portability of parents ages more than 55 years? So for people older than 55 years or 60 years, we recommend for your parents a floater or an individual health insurance plan, so that they are covered under it. Yes, it is possible to port a plan from the previous insurer to a new insurer. iThought plan, how many hospitals tie up? It is covered all hospitals. Sir, we are an insurance distributor. We are not the insurance company. We will help you to choose insurance companies as well for term and health insurance plans. We are not an insurance provider, sir. How much cover should we take for health insurance, including parents? So as a general rule for health insurance, for each person, there should be a 5 to 10 lakh sum assured cover. For parents, it is since their policies are usually costly, it is recommended to have a separate policy for them. But even for them, having a cover of 5 to 7.5 lakhs is recommended. Any government insurance policy, please tell me. Sir, we recommend the insurance, so kindly contact our insurance desk. They'll be happy to help you with comparing different health insurance and term insurance providers. Is it possible to increase the cover when we port to a new insurance provider? Yes, sir. When you port a plan from a previous to a new insurer, you can choose a different sum assured. So yeah, some companies offer group insurance. Which one is better, individual or group insurance? So group insurance does offer comprehensive cover even for some illnesses that are not covered under individual policies. But group insurance usually come with low sum assured, let's say 5 lakh or like 2.5 lakhs. Whereas individual policies, they are getting better. They offer a larger sum assured. Is paying 3 years health premium with 10 to 20% discount upfront a good option? Yes, sir. If you are anyway going to continue with the health insurance plan, and if it's a good health insurance plan, then getting a discount on the entire premium is a good option. Tamil Nadu CM insurance scheme, best or bad? So kindly get in touch with our insurance desk. They'll be able to provide you the comparisons for the different plans.
So we are displaying our contact details on the screen right now. If there are any further questions, you can always reach out to this number and the email ID that's mentioned here. So we'll pass it on to the insurance desk, and the team will get in touch with you. So any questions on specific to the health insurance plans or life insurance plans, we'll be able to provide you assistance offline. So our team will get in touch with you, and we'll guide you on the process. Thank you so much, everyone, for joining us today.
Thank you all.
Thank you, everyone, for joining us today on our webinar. If you have any further questions, you can always get in touch with your advisor who's in touch with you from time to time. Or you can also contact us via our email or the phone number that is displayed on the screen. Thank you so much for joining us today.
Thank you all.
Thank you.
Thank you.